Welcome to Business Decoded, where we break down how companies really make money. Let's decode today's business model. Elon Musk paid $44 billion for Twitter. Within 18 months, the platform was worth $19 billion. He destroyed $25 billion in value. This is one of the most catastrophic acquisitions in business history. Twitter was never highly profitable, but it was stable. Elon's takeover turned it into chaos. Mass layoffs, Advertiser Exodus, failed product launches, and a rebrand nobody asked for. Today, the platform formerly known as Twitter is bleeding cash and hemorrhaging users. Today, we're breaking down how Elon Musk's takeover destroyed Twitter's value, why the business model collapsed, and whether X can ever recover. Here's what we're covering. Twitter's pre-Musk business model, the $44 billion acquisition disaster, and what happens when ego overrides economics. Before we begin, a quick disclaimer. This content is for educational purposes only, not business or legal advice. Company references are from public sources for educational commentary. Trademarks belong to their owners. Consult qualified professionals before making business decisions. Let's start with Twitter before Musk. Twitter's business model was advertising. In 2021, 90% of revenue came from ads. Twitter had 200 million daily active users. Advertisers paid to reach those users through promoted tweets, trends, and accounts. Twitter generated $5 billion in revenue and made modest profit. The platform was never as profitable as Facebook or Google, but it was functional. Twitter's challenge was converting users into revenue. 200 million users is smaller than Facebook's 2 billion. Twitter's ad targeting was weaker. User growth had stalled, but the platform was stable and growing slowly. Twitter's cultural influence exceeded its financial performance. Politicians, journalists, celebrities used Twitter to shape narratives. The platform drove news cycles and punched above its weight in impact. Then Elon Musk bought it. April 2022, Elon offered $44 billion. Twitter's board accepted. The deal closed October 2022. Elon paid $26 billion in equity and borrowed $13 billion. He took Twitter private, delisting it from the stock exchange. Why did Elon buy Twitter? He claimed he wanted to protect free speech. He said Twitter's content moderation was biased. He promised to make the platform a digital town square. Critics said it was ego. Elon's a prolific Twitter user. He wanted control. The acquisition price was absurd. Twitter's market cap before the deal was around $37 billion. Elon paid $44 billion, a 20% premium. Twitter wasn't worth $44 billion. Elon overpaid dramatically. Here's what happened next. Elon fired 75% of Twitter's staff. 8,000 employees reduced to 2,000. He claimed Twitter was bloated and inefficient. Mass layoffs would cut costs. Instead, it broke the platform. Critical infrastructure teams were gutted. Content moderation collapsed. Engineering velocity slowed. Outages increased. The remaining employees were demoralized and overworked. Key executives resigned or were fired. Institutional knowledge evaporated overnight. The layoffs saved maybe $1.5 billion per year in salary costs. But they destroyed operational capacity. Twitter's ability to ship products, moderate content, and maintain infrastructure cratered. Advertisers are risk-averse. They don't want brands next to controversial content. Under pre-Musk Twitter, content moderation kept extreme content off the platform. After Elon took over, he loosened moderation in the name of free speech. Hate speech and misinformation spiked. Major brands paused spending. Apple, General Motors, Disney pulled ads. Elon's response was attacking advertisers publicly, telling them to go F themselves. This accelerated the exodus. By late 2023, Twitter's ad revenue had dropped by roughly 50%. From $5 billion annually to around $2.5 billion. This revenue collapse is why Twitter's valuation cratered. Elon tried replacing ad revenue with subscriptions. He launched Twitter Blue for $8 per month. Subscribers got a Blue verification checkmark and other features. The idea was diversifying revenue away from ads. It failed spectacularly. The verification checkmark used to mean something. It verified that you were who you claimed to be. It was given to notable accounts like journalists, celebrities, politicians. When Elon made it purchasable for $8, it lost all meaning. Scammers bought checkmarks and impersonated brands. Eli Lilly's stock dropped because someone with a fake verified account tweeted that insulin was free. Chaos ensued. Twitter had to pause the verification program multiple times. Even if Twitter Blue worked perfectly, the economics don't scale. Twitter has 200 million daily users. Optimistically, maybe 5 million would subscribe. That's 40 million per month, or about 500 million per year. Compare that to the 2.5 billion lost from ad revenue. Subscriptions can't replace ads. Then Elon rebranded Twitter to X. July 2023, Twitter became X. The bird logo was replaced with a black X. The rebrand confused everyone. Twitter had 15 years of brand equity. Everyone knew Twitter. The word tweet was in the dictionary. Elon threw it away. The rebrand served no business purpose. It didn't attract new users. It didn't increase revenue. It alienated existing users who identified with the Twitter brand. The rebrand was pure ego. Elon has a long-standing obsession with the letter X. He wanted his platform to be called X. Brand equity matters. Coca-Cola doesn't rebrand to Y because the CEO likes the letter. Twitter to X destroyed billions in brand value for no strategic reason. Elon's vision for X is an everything app. Payments, messaging, social media all in one. Like WeChat in China. The problem is Twitter wasn't built for this. The infrastructure doesn't support payments. The user base doesn't want it. Building this would take years and billions. Meanwhile, competitors are eating Twitter's lunch. Threads, Meta's Twitter competitor, launched in July 2023. It gained 100 million users in 5 days. Threads offered a Twitter alternative when users were looking for one. Elon's chaos drove users to competitors. Bluesky, Mastodon, and other platforms also gained traction. The Twitter diaspora fractured across multiple platforms. Twitter lost mindshare. User engagement metrics are murky because Twitter went private. Elon claims usage is up. Third-party estimates suggest daily users declined. Power users report the platform feels less active. Financially, X is in dire straits. Elon borrowed $13 billion to buy Twitter. That debt carries roughly $1.5 billion per year in interest. Twitter's current revenue is around $2.5 to $3 billion. After paying interest and operating costs, there's almost nothing left. X is barely breaking even or losing money. Elon has tried cutting costs further. Rent went unpaid. Lawsuits piled up. Server costs got scrutinized. These are signs of financial distress. The cultural impact is significant. Twitter shaped public discourse. Journalists relied on it for news. Politicians used it to communicate with voters. The platform had outsized influence. Under Elon, that influence is eroding. Mainstream media and politicians are less reliant on X. Alternative platforms are emerging. Network effects are weakening. The bull case for X is Elon turns it into a super app. Payments, messaging, creator monetization integrated. X becomes indispensable. Revenue diversifies beyond ads. The bear case is X continues bleeding users and advertisers. Debt payments crush profitability. Competitors chip away at market share. Elon's behavior drives users away. X becomes a niche platform. Valuation stays under $20 billion. For users, the platform's chaos is frustrating. Features break. Bots proliferate. User experience degraded. Many longtime users reduced usage or left. For advertisers, X is radioactive. Brands don't want association with a platform known for hate speech and Elon's antics. Even if moderation improved, trust is broken. Here's what to do. If you're a business relying on X for marketing, diversify now. Build email lists. Use LinkedIn, Instagram, YouTube. Don't depend on this unstable platform. If you're a user, decide if X still serves you. If not, explore Threads, Bluesky, or Mastodon. Now, next time on Business Decoded, we're examining LinkedIn. Microsoft paid $26 billion for it. Unlike Twitter, that acquisition actually worked. Elon Musk paid $44 billion for Twitter. He destroyed $25 billion in value in 18 months. Mass layoffs broke operations. Advertisers fled. Subscriptions failed. The rebrand to X made no sense. Debt payments crush profitability. This is one of the worst acquisitions in history. Whether X survives depends on whether Elon can build a super app from the ruins. So far, no evidence that's happening. And that's how they built it. If this helped you understand business better, subscribe for weekly deep dives into the world's most successful companies. Thanks for watching.